Hi, everyone. I'm Orlando Duque, and I'm a premier mortgage consultant with HSBC Bank. My partner and I have 20 years experience in the mortgage industry and excited to share some insight today.
Hey everybody, I'm Javier Soriano, also with HSBC, a mortgage consultant here to help guide you guys in this home buying process.
Yeah, excited to present with you. HSBC works with great organizations like Ideal, otherwise known as Avance Latino, to bring these great educational events for our communities and, as a way to give thanks. And, it's personal for Javier and I. We've been lucky to start in banking right out of high school, and having that inside information allowed us to be early on homeowners and multiple homeowners. So hopefully some of the information we'll share today will also help, you guys in your journey in homeownership. So one of the things that we'll be talking about today, just to give you an overview, is we'll be starting discussing preparing for your home purchase, also working with a realtor and a lender in that journey. We're going to talk a little bit about your home search journey, making an offer and what that means, and what are the steps involved in making an offer for your home. And then what happens once that offer is accepted, what happens at the closing, and even after you close on your home, what happens next in that journey of your home ownership.
All right, so preparing for a purchase. This is probably the first step and most important step in the home buying process. There's a few documents that you're going to want to, gather to be able to, submit your paperwork to a lender and get you set up in the right direction. So one of the first things we like to collect is tax returns. Most lenders will ask for either 1 or 2 years. They will ask for pay stubs or proof of income, along with bank statements, normally 2 months. Other things that they may ask for is investments, as far as 401ks, retirements, any stocks and things that you may have as well. And then lastly, if you are renting and you haven't been a homeowner in the past, the lender may ask for proof of rental or proof of rent payment history.
Yeah, one of the things they're looking for is making sure that you've paid on time that rental agreement for the last 12 months. So make sure you have your landlord information handy. And as Javier mentioned, this is one of the most important steps in the process, and we really recommend to do it early. We can't tell you enough how many times people come to us once they've found the home, and just a personal story. We've had friends, clients who, there was an error on their credit report or something that could have been fixed, and unfortunately now their payment's a little bit higher because they didn't come to us early. So we want to make sure that whether your plan is maybe to purchase 2 years from now or in 2 months, just get us involved. There's a lot of things that we have through our experience that we can give you insight to not only get you in the home, but make it as successful as possible. Another important step in the home buying process is, as I mentioned, starting early. And one of the things that we will do as lenders is make sure that your personal qualifications fit the lender's qualifications. But, we all know there's more than that. We really recommend designing a personal budget that fits for you. A lot of times, Javier and I and our clients have purchased, the home at that moment that was ideal for us. And, it was probably a little bit higher than we wanted. And we said, you know what? We don't need a vacation. We don't need new clothes. We're fine. We want that home. We're going to be at home all the time. And it doesn't quite work out that way. You still eat out, have holiday events and things of that nature that you just want to budget for. So a lot of times what we say you qualify for is based on income, assets, and other things that we'll discuss. But there aren't other things that we just can't possibly know. It doesn't show up on your credit. So make sure you work on your personal budget ahead of time. And of course, use our knowledge and experience if you need assistance with that. One of the things that you'll be doing is tracking your personal expenses that the lender doesn't consider, which we'll go over in a moment. Things that we don't consider are cell phone bills, vacations. What did it look like the last 3 to 5 years in your maintenance for your vehicle, unexpected events, medical events. It's hard to prepare for everything, but just spend, a good amount of time just making your best personal budget possible. So considering the budget, not only the expenses is something that you'll want to consider, also your net income. That's really important. Some of us are self-employed and there's gross amounts that we earn, but also expenses that the business has. We want to see what your take home is. And the same as some of us who are not self-employed. We work for a company, we work W-2. Not only do we have taxes, but we have ever-changing health insurance benefits, not only for yourself, maybe for family, that can change. So again, it's something that it may be difficult to do on your own. So come to us early so that we can help with that process and maybe give you some insight on things we've seen in the past. Now, I mentioned that there are expenses that the lender doesn't see that you should consider. I'll talk about expenses that the lender does see. And those things are items on your credit report. So anything that shows up on your credit report, like credit cards, auto monthly payments, lease payments. If you co-sign for someone else on a loan, that's going to show up on your credit. So those are all things that we're going to determine on your budget and what you qualify for. So it's really important that we look at that credit report early. I'm going to give you a big piece of advice that I think not a lot of people know about. There's some of us that pay our credit cards early, when the due date is. Let's say it's the 5th of the month. What a lot of people don't know is that credit card company might report your balance on the 30th or on the 25th of the previous month. So let's give you an example. You have a $10,000 credit card and you owe $5,000, which you pay off every month. Good for you. You're using your card for rewards points and things of that nature. And when you come to us to run your credit, you'll notice that balance shows up there, therefore affecting your credit score. It may not impact you. It may impact you greatly. So it's always important, again, to come to us early, let us review your credit report with you, review it yourself, make sure it's accurate, but also those things that, hey, let me pay off the credit card a month early so I can boost my credit score. And it's truly accurate. I pay off this anyway. So that's something that we can give you good insight on, or your lender or your loan officer, to work with you and make sure that we prepare your credit. Because again, in that example where you've come to us once you found that home, it's too late. Whatever's on the credit report, whatever your score is, whatever your monthly obligation is on that credit report, it is what it is. That's what's going to determine your rate, your payment, and what you qualify for.
Orlando, where can our clients get a copy of their credit report if they just wanted a free report?
That's a good question. There's a lot of resources online. One of the most common to get your free credit report is annualcreditreport.com. I personally sign up for Experian. They have paid or free memberships. Now, remember, there are 3 credit bureaus. So what may show on one might be different on others. So we highly recommend you're obtaining a credit report of all 3 or going to the websites directly and reviewing all 3. So let me tell you what those three are. Experian, Equifax, and TransUnion. So those are the 3 credit bureaus used in our country to manage and review your credit data. What happens if something is wrong? I highly recommend that you go on these websites directly and dispute that information directly. And again, you won't do this once you found the home, once you're officially pre-approved. This is something that you'll do early with your lenders or your loan officers, in determining what that information is that's inaccurate and what might potentially help, like paying off those credit cards, or someone who reported you late. It happens. Sometimes there's errors, or unfortunately, there might be identity theft, things that don't belong to you that need to be worked on, being removed. So the best way to start is going on these websites directly, Experian.com, TransUnion.com, Equifax.com, to work with these credit agencies to get this information updated. And please allow for 30 to 60 days. It's not something that happens right away. It does. You need to dedicate some time.
Definitely.
And it could take longer, especially in an event of identity theft. One of the things we also recommend is, for me, and for Javier, he might have his own memberships, but I sign up for Experian.com because it'll alert me anytime someone runs my credit. It'll allow me to put a block from someone running my credit. And that's something that's really important to, again, start early. Let's say your offer was accepted, you found your home, and your credit's locked. Now we're losing 1 or 2 days for you to unlock it because we don't have access to your credit. So those are things to keep in mind and work with your lender to make this process as successful as possible for you.
Yeah, and one more thing just about monitoring the credit. Some of your banks may be able to offer a free service as well. So I have a few credit cards with a couple different banks that they allow me to monitor my credit score through their online banking, which is ideal. That way you don't have to, pay for an added service. Credit Karma is also another good one. They do, I believe, have 2 of the 3 credit bureaus through their mobile app. So that's another good alternative also.
That's really good advice, Javier. There are a lot of credit card companies that offer that monitoring for free. And, I do want to add that what you see on these websites, as far as the FICO score, their credit score, that can range anywhere from 400 to above 800. And that it determines what your financial capability is, your credit history. There's a lot of things that go into that score. But keep in mind that when you go purchase a vehicle, the credit score they run, or in your credit monitoring, the credit score that was provided versus when you come to Javier and I and run your credit for a mortgage, those scores may vary. And again, just touching on the fact that it's important that you come to us early to determine what your true score is for your mortgage. It could be close, it could be a little bit higher, it could be a little bit lower. There's no exact science. Just know that these credit scores are different from your lender's actual credit report. Javier, can you talk to us a little bit about working with a realtor and some advice that you have on that?
Yeah, so I think this is one of the most important steps throughout the entire process. You want to make sure when you are choosing a realtor that you're selecting someone with the same goal in mind, right? And some of the places where we can find realtors are, with family and friends, maybe someone they've used in the past that doing an online search. You'll be surprised. Zillow and Redfin offer free reviews on their realtors. So that's a good option there. Also review their credentials, right? When you speak to realtors, a lot of them are really good speakers, right? I mean, if I can just say that. So we don't just want to take everything for granted. You do want to check their credentials, reputation, really look into their expertise and see if they're familiar with the market that you're interested in purchasing in. So I think that's very important as well.
Yeah, absolutely. And just like you're shopping for a lender, talk to a few different realtors, talk to a few different lenders, see who's the best fit, who you vibe with, who, is available for you, is communicating in the way that works best for you. And, Javier has great realtors that he's worked with for a long time. Your lender's also a good resource for those referrals.
And speaking about lenders, that the next step also after that would be finding a lender. First, try to start out and find someone who's local. The reason being is a local lender is going to be familiar with programs in the area, right? Like programs in your geographical area. The rates are going to be current to that also market area. And they're just going to have a better sense of, what programs fit clients in that particular area. And, every lender has a niche, right? Some lenders are good at certain things. Some lenders can help you with, let's say, down payment assistance. Some lenders can do FHA. Other lenders can do conventional or work in the jumbo market. So just speaking to multiple, lenders, getting an idea of what they offer and how they can help you, I think is very important.
Yeah, true. And just to give you an example, we've all bought t-shirts. That experience is going to change whether you're purchasing on Amazon versus Nordstrom versus Ross. They all have their benefits. There's no good or bad. It's just what fits you and what you're looking for, right? The quality is going to change. The price is going to change. So those are all things I highly consider in everything you do, including shopping for your lenders. A lot of times we just focus on rates, and it's a little bit more than that. And again, working with your lender early on in the process doesn't mean you've absolutely selected your lender today. It just means you've selected who you're going to work with in this process. And remember, once you found that home, that's when you're really shopping again and revisiting what rates and programs fit for this home, for this budget, because it's hard to determine everything up front. So know that once you've worked with one, you're not absolutely committed to that one lender, right? It happens to us all the time where we've worked with someone for a long time and things change, or there was just a better program out there that we applaud them for finding it and doing what's best for them and their family. Now, something that's a little bit different that Javier talked about is the realtors. Do your research, interview them early, but you are working with one. There's a lot of rules, especially that change in California, where you're signing a contract to work with this individual realtor for a set amount of time. Unlike a lender, we don't sign a contract. There's no commitment unless you've already started the loan. We're in process. We're in escrow. There are some commitments there, but in the home buying process, you do want to do your research early because, again, you can't just switch realtors. talk to a few different realtors, interview them, and that is who you're potentially going to work with for the next 3 to 6 months to maybe even a couple of years sometimes. Okay, so the next step, you've located or you've hired your realtor, you've now worked with a great lender to work on steps and getting prepared for home ownership. Now you're actually searching for the home. This is, I think, the fun part, right? You want to consider some things like the neighborhood. A lot of us have ideal neighborhoods that we want to be in, ideal school districts if we have kids or preparing for kids. One of the big factors I think for a lot of us is the commute to work. We've been fortunate the last few years to work remotely, in a lot of industries, but sometimes that's not the case, or you've returned back to the office, and I think your commute is a huge impact in your life. So something to consider in choosing your ideal home. Also, keep in mind that different neighborhoods may vary in property taxes, and your lender and your realtor will go into that in a lot more detail. But there's newer communities that have higher taxes to pay for the schools and the community they've built. So it'll change your monthly payment. It'll change your financial situation depending on those property taxes. One of the major things that's also changed is not only in California, I think nationwide, but California, Florida was impacted a lot, is home insurance. Home insurance has gone through a lot of changes the last few years. Some, like we've seen, it's very hard to find insurance.
Very hard.
When you find it, it's extremely expensive. So that's some of the things that we're going to look for in your home search. Are you near a high fire area?
A brush area.
Hills, near flood zones. So again, working with experts like your lender and your realtor, that's some of the things that you'll consider in your home search.
Yeah, I think that's a great point. I think one of the biggest factors is lifestyle also, right? That's a huge thing. Where do you live, or where do you want to live? Do you want to live close to parks? Do you want to live close to a shopping center? Transportation, activities. That's going to be a huge factor, right? Because this place that you're looking to purchase and buy and settle and grow a family in, you may be there for a few years, or you may be there for 30 years. You don't know, right? So you want to make sure that you do find a place that you feel comfortable with. I know a lot of the times other big factors are like noise, traffic, and safety, right? Especially if you have a growing family, you definitely want to live in a safe community. So I think that is a very important factor when, narrowing down the search for your home.
Yeah, Javier and I have known each other for a long time, since high school.
For 20 years?
20 years. And, in our first home search, I think one of the priorities was like walking to restaurants and bars, right? We didn't want to drive.
When you're younger.
Yeah, now that we have kids and our lifestyles change, you couldn't give me a house for free next to
I need to know all the school ratings before I buy my next house, right? So
and just remember that this, especially in our first home, it's not going to be your forever home. Not typically, right? It's something that's going to be the stepping stone for the next one, or the next few. So as much as we want to find that ideal home, and all these things are what I'm mentioning are factors, it's not always the case. Especially, let me give you some real world today's advice. Ever since COVID, even before COVID, there are more buyers than there is homes available. What that means is we can't be picky. There might be only 10 homes for sale in that neighborhood, in that price range, and what you're looking for, and there's 100 of us trying to buy. So part of the home search, maybe Javier and I are unique, that we just love searching online a lot. I would stay up till 2, 3 in the morning looking at different homes, within the 10 miles of where I wanted. Ideally, that had to expand up to 50 miles. Yeah, maybe my commute was going to be worse, but it was the size that we needed. I could move my mom in and needed. So there's so many factors that don't just wait for your realtor to send you things. You really need to be an expert, especially with everything being at your fingertips on your computer, on your phone. There's just no excuse. You can become an expert yourself in the next 30 days, as long as you allow time. And some of the things that we've used, as Javier mentioned, Zillow and Redfin are great consumer websites. I like Redfin, and there's no partnership with Redfin. We're just giving them a shout out because they're great.
No free promo here.
They're a great website that allows, it's intuitive, where it allows me to do a search in certain areas in certain price ranges, and it remembers. And one of the reasons why I won my last few home offers is because I saw
You
it
saw
on
it
the market.
first.
Yeah, within 10 minutes before my realtor saw it, before my realtor sent it to me, I saw that it was available right within my needs, and I was able to be the first. One of the things which we'll talk about in making an offer is you're going to be a better home buyer, not only based on your financials, but how versed you are. Are you a smart buyer? Have you done your research? Is this something that you've thought out where what sellers want is, yeah, for you to pay the most for their home, but they also don't want you to back out. They want to make sure that this is it. When you make an offer on the home, you spend enough time considering all these things that you are going to follow through in that commitment to buy the home.
Quick question for you. How many times a week do I send you houses that I see on Redfin?
And we're probably not going to move for any time soon. And we're still shopping for homes because you know what? I just had another baby. I need more space. You just never know when that time will come where you need to start your search again. So it's always good to just be, an active, maybe not as much as us, right? We're crazy and always going to open houses and looking at homes for sale, but it's always nice to see where your home values are. Once you've gotten in that home and, you want to see what's going on in your community, Redfin, Zillow, and a lot of other websites will keep you informed. So it's nice.
Yeah, it's great. Lastly, before we go into, making an offer and starting that section there, I think the other big thing about searching for a home is determining your needs and wants, right? How many bedrooms does a house have? Bedrooms, bathrooms, square footage, the style of the house. Is it a ranch home? Is it, I don't know, a 2-story house? Is it a condo, a townhome? The living space, is there outdoor space? Do you want a big yard? Do you just want, somewhere where you can go outside for a little bit and then come back in and just have limited space outdoors? Pets. I mean, I have 3 dogs. I know you've had a few animals, right? So is this place going to be pet friendly? Kitchen's a big deal. Kitchen and bathrooms are huge. And then what are like non-negotiables?
Like I mentioned before, some of us work from home. Do you have space to work from home, or is your child going to be running around? And a lot of us have a home office and we still deal with that. But again, those are some non-negotiables, having the space you need for your family. There might be ideal neighborhoods you want to live in, but just the price point doesn't give you that space that you really need for your family. Some other non-negotiables are like physical capabilities. You might have found the perfect home, perfect size, but it's 2 bedrooms. Someone like me who has bad knees may not be, the forever home. And, again, sometimes you are planning for long term, and sometimes you're planning, hey, this is the next home for the next 5 to 10 years, and it's going to help me build the equity. And yeah, maybe I put 3% down, 5% down today, but this home is going to help me put 20% down towards that forever home or the next chapter in my life home. So those are things to really consider. So, we're giving you a lot of advice, and the gist of it is there's no right one thing for everyone. These are just things that you have to consider in your search, and you don't want to have to consider it after you've already in the home, right? Because this is not a 1 or 2 year commitment. This is a longer term commitment, at least 5 to 10 years typically. One last bit of advice in your home search. Again, remember, especially in our first home, it's not our forever home. It's a stepping stone. What that might mean, and even when you're working towards your second or third home, a lot of us are interested in only looking at fixer-uppers, and a lot of us are looking for something that is done. Construction, finding a good contractor, that's a whole nother thing on its own. Not everyone wants to do work to home. This is something to consider in your home search. Compare a home that needs work, something that's in the middle that it's great, has great bones, maybe just needs kitchen and bathroom models in the future. And these 2 scenarios, it's a great opportunity. A lot of us are sometimes looking for side jobs. This is a great opportunity to invest in yourself. You bought your home for $400,000. The kitchen and the bathrooms haven't been done in a long time. Well, great. Maybe not going to happen right away, but over time you could budget and save for remodeling the home. Painting is something that we could do ourselves that greatly impacts the value of the home, the style of the home. So these are things that we can do without, let's assume that the home value doesn't change. It stays at $400,000 in 5 years from now. It's not going to stay at $400,000 most of the time with a new kitchen, new bathrooms. This is a way where, you could create income, not income, but create value, create more towards your next down payment. more return on this home once you sell it in the future. And then I do, again, want you to consider, what if you bought a home for 450, 500,000 with it already done? What does that look like in your monthly payment? So lenders will work with you and say, all right, well, I think based on your savings habits, your spending habits, your lifestyle, I think maybe $300 more a month in your mortgage is probably better than putting 30,000 on your credit cards, paying 1,000 a month to do this remodel and this fixer upper. So there's not a right or wrong scenario for everyone. And just work with experienced people like ourselves, your realtor, to guide you through that process. Again, the last thing you want to consider in that home search, in my opinion.
Thanks, Orlando. So now this leads us to the next step in the process, which is the most nerve-wracking probably step, I would say, is making an offer. And there are a list of things that we want to consider when we're making an offer. So what I'll do is I want to run down the list of what we have as far as things to consider, and then maybe we can touch on a few of those after the fact. So the first thing is the purchase price to the offer. That's probably going to be the biggest thought you're going to have is, how much should I pay for this house, right? Is it worth 500,000? Is it worth 550? What is the competition doing? Are they going to offer, they're at listing, are they going to offer more or less? Do you have any tips that you would kind of advise your clients as far as, what they should consider when they're making that offer as far as purchase price?
Yeah, I think the situation will change based on where the home is, what the home looks like. The home that's already done and remodeled is going to go a lot faster than the one that needs work. It's just the nature of that beast. But your realtor is really going to work hard on, hey, we spent a lot of time finding this home, this right home. We're making an offer. That means we're committed to buying this home. What does it look like? They're going to work with the realtor who's selling the home and say, how long has it been on the market? How many offers do they have? As Javier mentioned, what does that competition look like? Your realtor is also going to work with you to see, okay, in the last 3 to 6 months, are there homes like this one that sold that we can compare and give us a good indicator on what we should offer for the home? And my advice, Javier, every home that I've ever purchased, and I'm sure you feel the same, I've never felt I've overpaid. Up markets, down markets. I've won offers, not because my credit score was great or my down payment was great, even though those are all factors. Obviously the seller wants to know that you're not going to back out or your loan's not going to get declined midway. But what they're looking at is, how much am I getting for this home? Remember, they were just like you 10 years ago, 20 years ago, in a lot of cases, 50 years ago. And they made this huge investment on their home. They want the best return. I mean, it's not rocket science. Buyers want to pay the cheapest. Sellers want to get the highest price for the home. If you want to outshine a lot of other offers, if you're in that situation, put your best foot forward. What that means is, don't try to lowball and negotiate if that's not the right scenario for that. I know a lot of us feel like, well, this is our first time. We want to do what's right. And, hey, some of you that are listening to this aren't going to work with Javier and I as your lender. We're not your realtors. This is just genuine advice to say, if you're willing to pay $550, just offer the $550 up front. Put your best foot forward. And again, your realtor will work with you on that and give you advice. I'm not saying give it away. Your realtor might say, hey, this house is listed for $500. We got lucky. We have some inside information and other offers are at X. I think at $525 we can get it. Great. A lot of times you just don't have that information. It's a gamble. So again, put your best foot forward. Whatever the price is that you're willing to pay for the home, just offer it up front.
Yeah, that's a great point. I think another competitive advantage that you may have as a buyer is with your contingencies. And when I talk about contingencies, I'm talking about your loan contingency, your appraisal contingency, your inspection contingencies. This will give you an advantage. If you can shorten those times when submitting an offer, it'll definitely give you an advantage for being able to have your offer accepted. As far as loan contingency is concerned, we try to do as a good of a job that as we can upfront, collecting documents from clients, right? So we try to get them approved prior to, a full approval prior to getting into escrow. So that way, it makes your offer cleaner when you can submit, short contingency periods. So
absolutely. And a lot of times, the realtor who's selling that home calls Javier or I and says,
all the time.
where are you at in this process?
Can we do this?
Yeah.
Can I do a 5-day appraisal? Can I do or a 10-day loan contingency? So, you want to make sure you're on the same page with your lender and your realtor to help you set the best terms possible.
Yeah.
So,
which is why it's important, again, start early, work with us in providing those documents that Javier mentioned early on, because we don't want to be in that situation where you just came to us, we just started, and we don't have all your bank statements, and you've submitted an offer to the home. Great, you qualify for 550 as best as we could see, but we don't know that you had a big deposit that might be an issue, or change of employment, things that we could have tackled early. And one of the reasons why realtors are calling Javier and I are they want to know where you are in the process. Have you submitted everything possible to us? Have we done our due diligence? Is there anything pending that should have been done that we're just starting to work on now? So as Javier mentioned, not only is the price important, but something that's going to make you stand out above the rest is how quickly you can get your appraisals done, which you don't have control over. Your lender does. It's part of the process and shopping around is their appraisal process. But the loan approval, you do have control. Again, starting early and providing everything as detailed as possible that your lender needs up front.
one of the big questions that we get from our clients when they're submitting an offer is the earnest money deposit, right? They always ask, like, what is that? Is that a part of my down payment? Is it my entire down payment? Is that money protected? Do I get that back if we cancel for whatever reason? So, I mean, I don't have like a perfect definition for it, but what would you say, or how would you define the earnest money deposit?
So remember, you bought this home, and this isn't the end of the journey. Eventually, maybe one day, if you don't pass it on to your legacy, you will be selling this home. So when you're selling this home, you not only want the highest price for your home, but you want to make sure it's a nerve-wracking experience, not only buying, but selling. You want to know that someone isn't going to put you at a disadvantage by making a commitment and backing out for various reasons after they've done the inspections, which is their right. That's what an inspection contingency is. I want to buy your home contingent on, I'm not a plumber, I'm not a contractor. Once those professionals tell me what the condition of the home is, I'll evaluate that, yes, we're all good, I'm still moving forward. A lender is going to do their appraisal. They're going to tell me this is what it's worth. So yes, although there's variables, your earnest money deposit is your commitment to me as the seller. You, buyer, are saying, here's what my terms, here's what I want to buy your home for, and here's the money I'm putting up front that you may potentially keep if I don't follow through with these commitments based on our contract. So that's what the earnest money deposit is. Javier and I are Southern California born and raised, so a lot of our advice is based on Southern California, or California. It might change depending on the state or area you're buying, but typically your earnest money deposit is 3% of the purchase price. That's the average. Now, let's say you're buying $1 million home and your earnest money is $30,000, but you don't have $30,000 available. Maybe you have it in 401k or in investments that you haven't liquidated because you're just not there yet. You're still early in the process. It's something to, as Javier mentioned, keep it in mind. What is your cash available now? When I submit an offer to you, I have 3 days to get you that earnest money deposit or sooner. Again, that's my commitment. So your realtor will work with you on submitting this offer and putting these terms together. So in that example, maybe 30,000 isn't quite available. I have 20,000, and this isn't the time to borrow from family or get a gift. This is money that you want you yourself available. Now, if you are getting a gift, work with your lender. It doesn't mean you can't do that. It's just we have to prepare for that accordingly. Because again, that money, that earnest money deposit has to go to the seller, not to the seller directly. One of the things we'll talk about is escrow, a third-party company that's going to be the middle company between buyers, sellers, between realtors, lender. So that money has to be deposited into escrow within that quick amount of time. So again, you might only have 20,000 available. That's okay. That's part of your offer. Your seller will determine, well, based on this price, based on this earnest money deposit, I like their offer, or their offer is favorable, or they'll counter back. So you could say, hey, 20,000 is what I have, and they'll counter and say, no, we're comfortable if you deposit 25, or whatever the case is. So everything is negotiable in real estate. Working with experts, they'll tell you what's common. But again, that's part of the negotiation process in your offer. Does that make sense?
Perfect sense.
Awesome. you found the home, your offer was accepted, which is a huge milestone. That's, sometimes the most difficult part in the process in a high demand market. Again, 10 homes, 100 buyers. So you've won. You've got the offer accepted. Now the next step, as I mentioned before, this is where you're really selecting your lender. Maybe you've worked with Javier and I, and our rates have changed or programs have changed for the better or for worse. You're probably going to talk to a couple other lenders again. And that, as soon as you have your offer accepted, you're going to have a signed purchase contract from both the buyer and the seller. And that is when you're eligible to lock in your programs. Now, as I mentioned before, a lot of buyers wait for this moment to start their lending process, and that's like way too late. Can you do it? Yeah, it's just not going to be ideal for you. So you've already started the homework early. You've predetermined your lender, but again, you're going to shop 2 or 3 different lenders and get their best advice. So there are lenders like us, big banks, who have great resources, a lot of programs for our community that other lenders don't have access to. One of the benefits to big banks like us is that we lend our own money. So a lot of times we can give you things that is just not available in the open market. And then there's brokers who are great because they don't work for one lender, one bank. They have the ability to shop 30 different banks for you and see who has the best program at that time. So super valuable information from brokers, or sometimes called mortgage bankers. And then there's other institutions like savings and loans and local credit unions that you can talk to. One of the things that we recommend is talk to where you bank. What type of mortgages and programs do they have to offer? So just to simplify the process, you're going to look for programs like conventional. These are your most common standard loans where you just fit the box. We call those conventional mortgages. These are for qualified borrowers. Typically, rates are more favorable, programs a little bit more favorable. And then there are other programs like FHA where they're government backed, which allows for maybe a little bit outside of the box, different income requirements,
Lower
FICO credit requirements. So they're not typically cheaper a lot of times, but you never know. Any given day, it'll vary between conventional and FHA. That's why on the day your offer is accepted or the next day or two is a good time to shop these lenders and get into the meat and potatoes of what the offers are based on your qualifications, based on the property you've located. And then there are some less common programs out there like VA for our veterans or current active military. Great benefits there, low down payments, favorable cost in insurance, which I'll discuss in a moment, and rates. Again, that's more for veterans or active military personnel who have access to these VA loans. And then even less common, USDA. These are loans for in more rural areas, and they have their own guidelines, their own benefits. And it's not something you would typically, like home in Los Angeles, you're not going to look for USDA. It's based on your area, your realtor is going to tell you, hey, this area, or your lender is going to say, this is the best fit based on your situation, your home that you found.
Yeah, I think the next step after that is, once you kind of figure out what program you're going to go with, is now you got to decide, am I going to go fixed or, with a fixed rate mortgage, or are you going to go with an adjustable rate mortgage? And, really what that comes down to is your appetite for risk, I would say, right? If you're someone who, doesn't like change or fluctuations really or you're just more of a cautious person, a fixed option might be better for you if you feel that's more secure and it's giving you that long-term security that that you're looking for. That's a great option. Now, if you're thinking of going to adjustable, you're probably someone who is a little bit more of a risk taker, risk versus reward. Usually with an adjustable rate mortgage, the rates are slightly lower than the fixed rates. So you have to kind of think about, okay, I'll get a lower rate for, X amount of time, and then I got to worry about what the market's going to be once that fixed, period is over on that adjustable rate mortgage. Or, the other thing is you can, maybe this isn't going to be your forever home like we talked about. I'm only going to be in this house for 2 to 5 years. Maybe I'll take the adjustable rate mortgage now, knowing that in a couple of years I'm going to sell this place anyways and move into the next home, a bigger house, or downsizing also, right? If your family's growing or downsizing. So that's that would be your next step there. So.
Yeah, definitely. And remember, there's a lot of laws in place to protect you as a consumer. So there's no lender that's going to push you fixed versus adjustable. It's just, do you want tacos or do you want chicken tenders? It's just options for you.
Pizza.
Yeah, it's especially on your first home, it's okay to go fix, and you can't plan for everything. So do you want to lose your home because your interest rate changed? Of course not. So it's okay to play it safe. But if you're someone like us who have never lived in the same home for 10 years, 10 years ago, we wanted one thing. Now we have a family. Now our income's changed. We know these are stepping stones to the next home. For us, choosing an adjustable mortgage that's going to give me a better rate for 5, 7, or 10 years, and we save $300 a month is a pretty easy gamble. We take that $300 a month because, again, we don't plan to be there longer than 10 years anyway. So work with your lender and discuss what's the best fit for you. And at that time, on that day, when you're ready to lock a rate, what is a price difference? So this isn't something you need to figure out too early in the process. So don't overwhelm yourself. This is something that you'll choose at the time when you're choosing your loan, once you found your home. There's also variables that will affect the decision and what the price of this mortgage is. So not only interest rate, but also closing costs, and also something called private mortgage insurance in most cases when you're putting less than 20% down. So many, many years ago, you had to put 20% down to purchase a home. The federal government and the market has allowed for people who don't have 20% down to still get into a home, still be able to purchase their first home by allowing lower down payments, typically as low as 3%, 5%. And that insurance cost is really protecting the lender in case in the event that something happens and you can no longer pay for your home. That insurance helps recoup some of the costs to the lender. So they're able to take more risk and allow you to do lower down payments. And just like our car insurance, our driving history, our other factors, what's going on in the market, that is how that insurance is determined based on your home, your down payment. So 10% down is going to be a little bit cheaper than someone putting 5% or 3% down. So that's why it's always good to determine, we always hear 3% down is great, a lower down payment, but does 5% save you a lot in closing costs or save you a lot in insurance per month? The same thing with FHA. FHA sometimes will show you a lower interest rate, but the closing cost and the insurance might be a lot higher. So conventional loans, those typical loans, have PMI, private mortgage insurance, where FHA loans that are backed by the federal government, the Federal Housing Administration, they have MIP, mortgage insurance protection. So a couple differences. The premiums might be different. Again, what you pay per month. Your initial cost for that insurance will be different based on those factors. Your closing cost is going to change. Also, with conventional loans, there might be a point without having to refinance in the future that you can remove that insurance, whereas the FHA is typically for the life of the loan. You can't remove it. You have to refinance in the future. So all things to consider when talking to your lender and choosing your loan.
And really quickly too, usually with an FHA loan, not only are you going to have that monthly MIP premium, there's also an upfront premium also, including your closing costs. So that's an added expense that you'll want to take into consideration.
Definitely. And your lender has a cost for doing this loan for you. Not only is it the interest rate, not only is it the insurance, there's other costs involved in the closing of your home, but your lender has that ability to charge more or less upfront. That's why there's two things, an interest rate and then an APR, an annual percentage rate. And that annual percentage rate is for us consumers who are not math wizards and don't know, okay, is it a better deal to go with Bank One, who has a 5% rate and $10,000 in closing costs, or Bank Two that has a 5.5% rate with $2,000 in closing costs? So the APR does that for you. It determines what you're paying for the loan plus the interest rate and gives it into an interest rate format for you to compare a little bit easier, multiple banks. And one of the things that I failed to mention early is you could early in your process shop around. I'm not saying you've chosen Javier and I, and then you found the home, you have to switch. That maybe you did enough research early. You talked to 2 or 3 lenders early, and you've decided, no, this is what the best fit is for me. Again, when you find the home, you might do another double check to make sure it's still the best program for you. But remember, when it comes to your credit, we do a good job of keeping it safe, maintaining it as high as possible. But this is a home purchase. It's one of the biggest transactions in your life. This is what the credit is for. So when you're shopping around early and when you found the home, you can run your credit with 3 different lenders and it's not going to impact you negatively. You're being a smart consumer and shopping what your options are. There's a lot of online quotes. There's a lot of quotes I can give you by phone. These are estimates. You have to run your credit, provide your income documents and make sure you qualify. And within 3 business days by law, these lenders or this lender has to give you something called a loan estimate. And whether your rate is locked or unlocked, what your closing costs are, what the APR is, and that will help you in black and white determine what the best fit is for you.
It's going to help you shop around also because like Orlando mentioned, it's going to have the interest rate on there. It's going to have the monthly payment, estimated closing cost, and any other kind of unique details about your loan. So once you have the offer accepted, you applied, we've submitted your loan to underwriting. Like Orlando mentioned, after 3 business days, we do have to get you a loan estimate. So
we talked about lenders. Now we've selected the lender. They found HSBC, Javier is the best fit. What happens next?
So the next step would be inspections, right? So you have your home inspection. Typically, it's not required by the lender. We don't need to see it. It's for you and your peace of mind, right? This is where you're going to have someone come out, inspect the property, make sure things are working properly. The roof's okay, electrical, big ticket items that can cost you in the future. You do have a protection period with inspections as well, right? So typically with the home inspection, what do you normally see? Maybe 7 days?
I believe the California contract says 17. It gives you enough time, but that is your way of saying how badly do I want this home? How quickly can I make the decision? So as you mentioned, a lot of times people like us who are experienced may say, hey, look, I can call inspectors within 1 or 2 days, get them out to the property. And once I have the report back, I'll make a decision 1 or 2 days later. So we might write offers for 7-day inspection contingencies. Again, maybe our financials allow for a little bit of room. If, I need to invest $10,000 in plumbing and electrical, that might not kill the deal. Someone who just saved enough for the purchase of their home, doesn't have a lot of money left over for those big unexpected expenses may need a little bit more time to do due diligence and make sure, is this the right home for me? So typical is 17, but again, you can lower it based on the demand and based on where you fit as a home buyer and your realtor's advice as well.
And then that jumps right into the next inspection, which is the home appraisal. It's usually scheduled by your lender. So, once we're in process, Orlando or I will order the appraisal. And this will confirm to everyone what the value of the property is. So,
yeah, and this is a third-party company who we can't call, we can't have any communication with. It's to protect you. It's to protect us as the lender and say, if you're buying this home for $550, is it worth $550? So an independent evaluator will provide that report to both you and the lender to determine that. And if the appraiser says, no, it's not worth this, you could either renegotiate or, go from there.
All right. So we get through the inspections. Everything's great. Your loan's going through just fine. Now we're getting to closing day. What normally happens during closing day as far as preparing?
Yeah. So again, you did a great job of submitting your documents on time, early. So the loan process was smooth, which most of the time it is, working together with experienced loan officers. Now, at the end of the process, remember how I told you there's a loan estimate that you receive up front? There's something called the closing disclosure that you'll get at least 3 business days before your final loan documents. So this is going to allow you to reiterate those terms that you selected up front. Is the rate the same? Is the cost the same? Is everything the same as expected? And then remember, there are things that'll vary. So when you come to me or us as your lender, we don't know how much an escrow company is going to charge in this transaction, title, what your home insurance is going to be. So there are things that can change. What the lenders charge, the interest rate, if you locked it in, and what the amount of the closing costs that the lender charged shouldn't change. That should be quoted upfront and should be extremely accurate at the very end. But those other items like home insurance, maybe you thought it was going to be $1,200 a year. It ended up being 3 times more, $3,600 a year. Still fits within the budget. Again, this closing disclosure will reiterate all the closing costs. Again, that's not affected by the lender, outside parties. It'll give you your true final payment. 3 business days later, the lender will send or a little bit earlier, they'll send the final loan documents to escrow or the title company, where you will meet with a notary to get those signed and review all the terms. What happens if you don't pay? What happens if you do have an adjustable mortgage? How does it change? So a lot of disclosures. It's not as bad as it seems. There's multiple copies. It looks like a big stack, but again, all good information for you that the lender provides.
Yeah. Normally after that also as well, your realtor will work with you on going through a final walkthrough of the home, right? Making sure that, you go to the house, you take a look at it again and make sure there's nothing, nothing's changed. You didn't have squatters in there, or I'm just kidding. There shouldn't be squatters in the house, but just making sure everything looks like it's supposed to look, right? And nothing's out of line there. So
yeah, the same or similar when you started your inspections up front. And it's really rare that anything does happen, but again, you'll work with your realtor to do your final walkthrough. And again, that's part of your closing week. Once you've signed your documents, that is when, we talked about the money for the earnest money deposit. That's the amount of money that you've submitted up front. Using that example, let's say it was 3% of the purchase price, you're putting 5% down plus your closing costs. That's the amount of money that's due at the end. You're going to wire the remaining balance of whatever is due at the end. After you've signed with your notary, typically escrow has prepared a document showing you the breakdown again and what money after your earnest money deposit, what else is due. There's a lot of great programs out there that HSBC is a participant in. We created our own programs for the community where there are grants available. Credits towards your closing costs, credits towards your down payment that are available. So this will all be outlined at the end and taken into consideration. If you're getting grants for most of your down payment and most of your closing costs, then hey, Orlando, what happened to that $20,000 that I put up front as a commitment? You can't use your grants for the commitment. You have to put up your own money. So in some cases, you might get some of that money back because your down payment was $30,000, but HSBC, other lenders, other community grants gave you $40,000 to cover everything. So you can potentially get your earnest money deposit back or some of it back. So that's, again, part of the closing process that you'll work with your lender and escrow to iron out all these details and iron out all the funds. So super important. We've done all this great job of being a great consumer, shopping the right lender, getting the loan done on time and smooth and quickly. And then at the end, your ID is expired or you lost your ID. Remember, a notary is going to need a government ID with the photo, and notaries have the requirements of what's needed to sign these documents. Make sure you have that ready. Make sure that your name, when I got married, a lot of us Latinos, we have 2 last names. I dropped one of them.
3. No, just kidding.
Yeah, sometimes. So, make sure that your ID matches what you said you wanted your name on the title of the home. So all that's really important to consider in your closing, right? Have your IDs not expired and available. And then your funds. If you are taking funds from a 401k or stocks or other investments, things that are not available, my mom is giving me a gift. We're not waiting for that week of closing because sometimes, the 401k takes a week or 2 to get me my money, or tia's in Mexico or in Colombia, that week. We want to make sure that we're preparing for the closing, making sure that the money, all the money that's needed, wherever it's coming from, is available a week before closing.
So once we've closed, everybody thinks the journey's over after, right? You got your house, everything's good. Now what? Now you have to get the utilities in your name.
That's the hard part.
And you have to start prepping.
Pay for the mortgage.
Yeah, you got to start prepping to be a successful homeowner. So there are some tips we want to kind of share to help you, be the best homeowner and make things easier for you once you do become a homeowner. So the first thing you want to do is, you spent all this money on your down payment, closing costs. Trying to rebuild the savings, as soon as possible is super crucial, right?
Super important.
There's going to be emergencies, things that come up. I'll give an example. I bought a house and about a month in, my water heater goes. So, barely moved in and now I got an expense. I got to pay for a water heater. So you do want to have those backup funds, back or start putting that money away as soon as possible. So
yeah, and that's why we talk about that part early on in the process in your budget. It's really important. A lot of us, I'm guilty. I I budgeted based on my expenses and my new home and maybe a little bit of fun, but not emergency savings. And it's super crucial in that budget because things come up not only in the home, but here in LA, we have potholes. Hit a pothole, and now you have an extra $500 you have to pull from somewhere for new tires. I mean, it's super important that in your budget early on that you plan for the savings and actually use it. Actually, after your home, put that money away in savings. And if all went well, great. Use that money and do your bathrooms, do your kitchen. But again, make sure that you're not only budgeted for that savings, but actually putting it aside. And if you're early on in the home buying process, it might be a year or two. Pretend you have the mortgage payment today. Maybe you're only paying $1,000 in rent and your new mortgage is going to be $3,000-4,000. Well, don't wait until we've closed and you're in the home to budget for that $3,000-4,000. Pretend like you have that payment today and you'll see how much your savings will improve. And not only will you have money for the home, but also money left over, hopefully afterwards for unexpected expenses.
Yes. Speaking of unexpected, expenses or things that can come up, one thing we do want you to also be aware of is you want to anticipate that your mortgage payment's going to increase. And I say that because if you decided to have your homeowner's insurance and your property taxes included in your mortgage payment, meaning you want us, you're going to pay your monthly mortgage payment every month. We're going to set some money aside for you. So when your insurance is due, your annual premium, we're going to go and pay that out. When your property taxes are due, we're going to pay that out. Well, those things change every year, right? Home insurance, like Orlando mentioned earlier, goes up and down. I mean, it's been going up the last few years. So that will affect, your monthly mortgage payment because we have to make sure we're collecting enough to pay those items when they're due. So you just want to kind of keep that in the back of your mind and don't get freaked out if you see, a slight mortgage payment change. So
definitely. And the reason why we're doing this is we have independence. We control what we do with our home and we don't answer to landlords. And also it's an investment, right? This $500,000 home, we want it to be $1 million in the future. So what's going to happen as these values increase, your property taxes will increase. So it's a good thing, but good things come with, their expenses. So even if you have a fixed mortgage, you still have to plan for some changes or potential changes in your payment in the future. Well, I think you've heard us talk for long enough, but, we applaud you for taking that first step in this journey and getting yourself informed. This isn't the end of your education process. Lean on your experts, lean on friends and family who have experience in this. And let me add that there's community programs that we recommend, which Javier will talk about. But also HSBC, I waited till the end. Here's my plug. We have programs that fit very affluent clients. Sometimes your journey and your income and your savings, you waited for some time and you're very well qualified and you fit a higher income price point. HSBC is really, really one of the biggest competitors out there for higher price loans, higher price homes, I should say, but also fit the demographic of lower income or areas, communities that are designated high minority or low income communities where other lenders have grants or communities have grants. What makes us special is the fact that our guidelines are whatever we want it to be. So a lot of times what you qualify for might be a little bit more based on our guidelines, the credit score requirements, the interest rates that we offer. So we're highly competitive in that mark, not only in the higher price homes, but also homes that again fit the diverse communities that we serve. So definitely reach out to us for more information on that.
One other thing I like to mention is our partners at HSBC. So we do have a partner called Green Path Financial Wellness. It's a nationwide nonprofit that provides financial educational tools to empower people. So if you want more info on how to build credit, how to get financially savvy and prepare you to purchase a home or just manage your bills and your finances better, Green Path Financials is a great contact there. We do have a telephone number for them if you want to speak to a financial expert. It is 877-337-3399, or you can go online at my.greenpath.com.
Awesome. Thank you, Javier. And As I mentioned, I'm Orlando Duque. This is Javier Soriano.
Thank you guys so much.
If you just Google us at HSBC Bank, I'm sure you'll find us if we could be of service.
Thank you very much.
Thank you guys.